This is the briefing for Monday, March 10th. I'm going to take a little bit different approach to the analysis tonight and start with a longer term chart, meaning the weekly chart of the spiders, the SPY, and the Qs, the QQQs. This is the weekly chart of the spiders. And as you can see, we've been in quite a nice uptrend. This goes all the way back. This trend here goes all the way back to October 27th of 23. So, and you can see that the market runs and pauses, runs, pause, runs, pause. Now, what's important is that when you have a series of higher highs and higher lows, then as long as that's kept intact, the trend is intact. But it appears now on a weekly basis, a longer term basis, that the market has transitioned into a greater degree time and price pause. You can see this pause right through here. Now this pause started, I think this day was, it's November 8th of 24, and then going right through to today, where finally it broke through this 564 or 565 area and closed below it at 560. So that now suggests to me that potentially we are in the process of transitioning from a daily trend or a weekly trend into a greater degree time and price counter trend rotation, which would suggest then that since we've broken the last higher low, that we're going to potentially test lower support. On a weekly basis, that comes in right around the 505 area, 507 area. Now, we'd had some buying that did come in today at the end of the day, and on a 60-minute chart, it looks like there was exhaustion on the part of sellers as we went into the close today, and buyers stepped in and started to drive up. And I'll get to that chart in just a few minutes. Now this is important because the next level of support coming in at 505, 507 would then give us a greater degree correction to this breakout and this trend that goes all the way back to November of last year. The real question is that are we going to transition that far, or is this just a false breakout on a longer term basis, and potentially we could see some type of move back to the upside? Now, there are a lot of things going on geopolitically and economically that I think the market is or I should say is weighing on the market. And if those are resolved, I think that this could be a tremendous buying opportunity. We could see the market scream higher should they be resolved. On the other hand, there are some geopolitical events out there that if they occur and occur in a poor way, that we could see the market accelerate to the downside. So we're really at a crucial point, I think, in the market in terms of the behavior of traders and investors. But right now, all we can do is analyze the information the market gives us, and that information suggests that we are now transitioning into a greater degree time and price counter trend rotation. Now let's look at the Qs. So you can see the Qs, you can see the trend, this breakout trend. I think this goes all the way back to May of 23. So you can see this move. You can see the run, pause, run, pause, run, pause, run, pause, and you can see this was the last higher low, and this low did not take out that low. Came close, but it didn't take it out. So you can see even that here's the rotational pattern that we've been in for quite some time. And then, of course, you can see the breakout of the 500 level last week, and this week we've got follow through in today's trading. So the Qs, or the NASDAQ, has definitely transitioned from a uptrend on a weekly basis to a greater degree time and price counter trend rotation. Now let's go down to the daily charts. So here's the rotational pattern that we've seen for several weeks that I just showed on the weekly chart. This is the spiders. This is the 580 area, which was the lower extreme of this area of rotation. This was the day of the false breakout. We had then a rotation back up. Then we got this rotation at the upper extreme at the 610 area, 612 area, and then finally a breakout down. And then the next level of support was 565. We broke through that, closing at the 560 area. Now, You can see also what's happening with volume. Volume is confirming this move. 52-week highs minus 52-week lows confirming the move. And we had a turn down in today's trading. And of course, you can see what's happening with breadth. Breadth is declining as well, going into the close for today. Now, I talked about the buying tail on an hourly basis. You can see it on a daily basis also right here. So we did have some buying that came in, which suggests potentially we may see some type of pause or some type of rotation in tomorrow's trading, unless, of course, there's some bad news. Now, looking at the Qs, you can see a little bit of buying that came in at the end of the day today. Look at volume. This is definitely an impulsive move, and volume is just exploding to the downside in the Qs. Breadth is declining, and breadth was even more weak today than I've seen it in quite some time. 2,800 shares negative in the NASDAQ. So basically, what the market is telling us, the information it's giving us right now, and we know that markets run and pause in all degrees of time. So on a daily basis, we're not going to see the potential for just a straight move to the downside, unless, of course, we're entering a period such as the 2000 or the 2008 area, or the flash crash that occurred. I think that was in 2012. But you can see even on a daily basis, you got a run, a pause, a run, a pause, a run, a pause, run. Potentially, we're going to see another pause. And the reason I say that is because this is the overbought and oversold reading that I use, indicator that I use. This is the NYSE. The NYSE is basically approaching oversold condition, oversold territory. The NASDAQ is extremely oversold, more extreme than I think I've ever seen it in a long time. So you can see that it is really at an extreme low point, which would suggest to me, unless there's a huge thrust tomorrow morning, that we're going to see some type of potential pause in tomorrow's trading. Now, moving back to the hourly chart, you can see that here's today's trading. You can see the gap down on the spiders. Then you can see the move down. And here's the buying that came in towards the end of the day today, and then a little bit of follow through. Same thing with the Qs. There's the buying tail that came in, and then a little bit of follow through going into the close today, and the Russell, the IWM, doing exactly the same thing. So for tomorrow, watch these buying tails. Now, if these buying tails get about halfway closed, that means the guys who stepped in and bought this market and drove it up from, let's see, from a low in the spiders, I just use that as an example, from a low in the spiders of 555.59, if they bought that and they don't defend it tomorrow by about halfway down, let's call it about the 558 level, if we trade through that, then potentially we're going to see today's low taken out, and then we could see an additional acceleration to the downside before we see some type of pause that the market should give us from this current extreme oversold reading. Now, if we do get a lower low below today's low, watch what happens with breadth. And you can see what happened with breadth in today's trading. You can see the divergence going into the low of today. So that suggests to me also that potentially we're going to see some type of counter trend rotation or pause in tomorrow's trading. There is not a divergence in the NASDAQ. The NASDAQ is just really, really weak. Neither is there a divergence in the Russell. So the NYSE is giving us, the S&P 500 is giving us some degree of hope that potentially we're going to see a pause or some type of counter trend rotation because of the divergence we see there, but that could get eliminated tomorrow if we do see another thrust back to the downside. So for my own trading, I'm looking at this level here as the next upside resistance on a short-term basis, right about the 572 area, and in the Qs I'm looking at about the 490 area, and in the IWM looking about 205. So watch those areas. If we do get some type of rotation back to the upside, those areas should hold If they do not, then that's going to give us the potential to analyze that counter trend rotation to determine whether it is going to be a greater degree time and price counter trend rotation, or potentially even a change in trend. The news can change this market in an instant, so just be cautious with your positions, and just keep an eye on what's happening with the internals, because they will give us an indication as to whether we have reached the bottom at some point in time, or whether we have much more downside work to do before this is over. Have a great night. I'll pick this back up again tomorrow for subscribers.